Ladies and gentlemen, it is that time for a price prediction video on AMC stock for this week, but as well as that to talk about major market catalysts that will have a large effect on this market. So if you guys are not awake already, grab yourself some coffee or whatever you like to drink in the morning and let's dive into it, guys. So first things first, I want to start with kind of the broad market stuff here because the broad market will have an impact on AMC. On one hand, if the markets do go down, you get closer to this collateral crisis. You get closer to seeing hedge funds be forced to make a tough decision. That would be placing more collateral in their short positions to fund their short positions, or to cover on those short positions, because after all, when cost of borrow fees are 200-300%, when the arbitrage trade doesn't look so clean cut, can really make you have some doubts on why you are short on a stock. Just the cost of borrow fees alone are draining these shorts. So I think it puts a little bit more emphasis on some of this information that we're going to talk about here in this video. So let's start off with the economic calendar. Now, you guys use this tool. Seriously, use this tool. If the markets are, moving big, or, there's a sharp drop or something happens, you can go to this calendar and it has major data from all around the world. Most importantly, obviously, you want to watch American data, but you can kind of get the information pretty fast. This updates in real time as well. Any data points that come out, you guys will be able to get this information before it's available on like news outlets or news wires or anything. Now, really, Monday and most of this week is all going to be Fed talk. You're going to have a bunch of Fed speakers, and that's probably what's going to move this market, at least here in the short term. And specifically, it's Fed comments on inflation expectations. So inflation expectations came out on Friday, and that's what caused the markets to be pretty red most of the day Friday. The big story was 5 to 10-year inflation expectations went higher and hit the highest levels that you have seen in years. Question is, why is that happening? After all, isn't inflation going down? Isn't the consumer kind of sensitive to inflation, right? It was higher, it's coming down, economic conditions are weakening. Shouldn't that be something that causes inflation expectations to go down? After all, you just seen 3 banks fail, some of them well-known names. First Republic is not just a Wall Street bank. Like, a lot of people, I knew what First Republic was, like, before I was ever in stocks, right? It is a very big deal. All of that is disinflationary or deflationary. It should be leading inflation expectations to fall, but it has not done that. The Michigan 5-year inflation expectations hit 3.2%. That's, again, the highest level that it has been at in a very, very long time. This is a 10-year chart, guys. A 10-year chart. You look at a 25-year chart, you got to go back to 2011 to see 5 to 10-year inflation expectations this high. This whole argument of inflation expectations remaining anchored, the Fed has said this over and over again. That doesn't look so likely now. That doesn't look like the case. Not with the data we're seeing here. So a very big problem. And Fed speakers, if they kind of, are saying this is a problem and a cause for concern, that's, I think, the biggest thing short term over the next couple of trading days that will be the main reason why the markets do fall. On top of that, the headline consumer sentiment number was expected to come in at about 64, and it came in at 57.7. So overall consumer sentiment doesn't look that good. And last month, you've seen inflation expectations 1 year and 5 year go higher by a lot, especially on the 1 year. But that didn't really create a trend, right? Now you've gotten 2 of these data points that are showing inflation expectations possibly getting anchored or unanchored, I should say. And that is starting to show a little bit more of a trend. So quite scary, at least for the markets. The Fed, anything they have to say about raising rates or keeping them higher for longer, or no rate cuts, those are going to affect the markets. Now, let's run through this data here briefly. Fed Bostic speaks at 8:45 on Monday morning, and this is Eastern time. Fed Kashkari speaks at 9:15. Fed Barkin speaks at 12:30. Fed Cook speaks at 5 o'clock, and that's going to do it for your Monday. For your Tuesday, you're going to have Fed Mester that speaks at 8:15. Retail sales month over month for April coming in at 8:30. This can actually be a pretty big catalyst as well, because you're expecting this to go back into positive territory with a 0.7% month over month gain. Last reading we got was negative 0.6%. And there's going to be retail sales excluding autos and a bunch of other data points that go along with this, but that headline retail sales number will be important. Fed Bostic speaks at 8:55. Fed Bar, the testimony on basically this banking situation, is at 10 a.m. on Tuesday. Retail inventories also comes in at 10 a.m. on Tuesday as well, expecting that as 0.4% positive. Last month, it was negative 0.1. 52-week bond auction. That will be important as well at 11:30 a.m. Tuesday. Fed Williams speaks at 12:15 on Tuesday. Fed Logan speaks at 3:15 on Tuesday. And Fed Bostic speaks at 7 p.m. on Tuesday. On Wednesday, you're going to get building permits. These don't tend to be huge catalysts, so we're not going to get into expectations for that all too much. And that's it. So actually, Wednesday might be the slowest day of this week. On Thursday, you're going to get Philly Fed data, business conditions, CapEx, employment, and new orders from the Philly Fed. That will be very important data for this market, believe that or not. Initial jobless claims. This is going to be big as well. On Thursday, you actually seen a very sizable uptick in initial jobless claims. This is more or less current data. Some of these jobs reports that we get, right, the unemployment rate and the payroll report from the government, those are 1 month delayed. These initial jobless claims come in on a week-by-week basis. And you've seen them go higher by about 22,000 just week over week. So if you start to see that number going higher, it's going to be a problem. Previous week was 264,000. This next week for May 13th, expecting 270,000 unemployment claims essentially being filed. Fed Jefferson speaks at 9:05 a.m. Fed Bar at 9:30 a.m. Existing home sales, that's going to be a big catalyst as well, coming in at 10 a.m. Friday, you're going to get Fed Chair Powell that will be speaking at 11 a.m. And that's going to be obviously the biggest catalyst of this market. And it could get pretty ugly. Now, all things considered, the debt ceiling is the biggest really point of worry as of right now, because the debt ceiling that needs to be raised, and it looks like nobody is wanting to raise it. So those are all going to be things that will affect this market for this week. Now, you're also going to have some earnings coming out. A lot of your retailers, right? Home Depot, Target, I believe Walmart as well. Some of those guys that can give you a broad indication of how the economy is doing will also affect this market. Now, if we go ahead and get into specifics on AMC, and we give a rundown of the short interest numbers, you got about $684 million worth of short positions on AMC. Estimated short interest of free float at about 25%. Free float out on loan at about 31.9%. 165 million shares out on loan. Days to cover at about 5. Cost to borrow fees over the last 3 months at 177.9% and 100% share utilization. Now, the option activity, that has been the real story and the thing that has been pushing AMC stock lower. The $10 puts, the deep in the money puts, are really being targeted quite heavy from institutions. This is not a high conviction trade. This is not hedge funds expecting AMC to fall off a cliff. That's not what these trades are. These trades are more or less trying to suppress the price of AMC. That's what these trades are doing here, right? So that's kind of what we've seen. As volume has been lower, you've gotten a lot more bearish, options coming in. Both of those things put together helps to drive down the price of AMC stock. So that's what you have seen as of recently. It'll be interesting to see how that does continue to play out over the next couple of days. If you start to see less of that, would be a positive thing for AMC. Now, big option expiration coming this Friday as well for the markets, but also AMC stock. Calls in the money, 32,000. Calls out the money, 322,000. And look at this, puts in the money, 210,000 contracts. I don't really expect that to move a lot because the $10 strike is pretty far in the money. You would have to see a very sizable rally to get that to happen. And if you were to get to those levels, you're probably going to go a lot higher. Just based off of 210,000 puts in the money. That is a very large number. Out the money puts at about 298,000. So definitely some bearish positioning here. But again, silver lining. It's not like they're expecting an imminent collapse of AMC. That's if you were seeing like $1, $2, $3 puts being placed on AMC, that would be a little bit more cause for concern. Like, hey, do they know something, right? Is AMC about to plummet? Not getting any indications of those kind of orders. You're really not seeing anything that is really bearish on AMC. That is, out the money puts or anything like that. You're just not seeing it the last couple of weeks. So I would say that is an encouraging sign. Now, if we take a look at the technicals as well and get into an actual price prediction for AMC, AMC stock closed at $5.18 per share. As we indicated in the last video, the 50-day moving average is $5.35. 50-day moving average is $5.15 per share. I knew that didn't sound right. The 100-day moving average at $5.21 per share. You are pinned under the 100-day moving average, but higher than the 50-day moving average. Now, this is going to mean you're going to get a big move to either direction, most likely this week. Also, keep in mind, the court situation is going to be the thing that really drives AMC like 20-30% up or down in a day. So be on the lookout for that. We're waiting on any recommendation from the special mastery. We have not gotten any news of that. That's going to be the next big catalyst for AMC stock, in my personal opinion. Now, you do have tailwinds here. Like typically AMC stock does rally after earnings. So I would say that is a overall, bullish thing that tends to happen with AMC. About 80% of the time, the stock tends to rally, and some of the rallies can be hundreds of percents here. So what we're just seeing on a technical basis is you're finding support at that 50-day moving average. That is good. And why do I say that? Because you tested that. You broke under the 50-day moving average on Friday, and you retraced up higher to close almost near the highs of the day. Very positive. Now, you're still in this trend where you have been hitting higher lows. As long as AMC stock stays above $4.90 per share, you're good. You're in a bullish trajectory. You're in a bullish uptrend. AMC stock, worst case scenario this week, in my personal opinion, unless the markets completely deteriorate and fall apart, would be AMC going to about $4.80 per share to start a new downtrend. It's not my base case, but it's possible, this is a possible outcome. Now, my base case would be AMC to kind of come back and try to retest these highs at about $6 per share. In between $5.70 and really $6 per share. I think the bullish uptrend is intact, and I think this post-earnings rally that we typically get with AMC likely to start this week. And again, as major technology stocks do fall, your big players in this market, right? Your Apples, your Microsofts, these guys that are huge leaders for 2023 relative to other names that have really underperformed. If those guys do fall, and a lot of people are calling for that, that's going to put a lot of pressure on collateral that is funding these AMC short positions. So all in all, do expect a bounce here really to that $5.70 to $6 range. Could go higher than that, could go lower than that. You could trade sideways. Who knows what ultimately is going to happen with AMC? It's very much a stock that doesn't make a lot of sense. Just a lot of it just doesn't make any sense. Like, why are hedge funds trying to suppress the price of AMC? Do they really have that much to lose? Or is their ass out on the line for this trade? Sure would seem like it, at least the way that they are behaving, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.